Hello, this is Jukka from Option Investors Club and I wish to welcome you to watch the Operation Small Account Growth performance review of week 49 of year 2020, and that happens to be the first week of December. On the agenda today we've got pretty much the normal stuff, but a little bit more than previously. First we go through the action. We have 4 new positions this week, and then we took 4 cash flow trades in addition and sold 2 positions. We'll go through current portfolio holdings and how they're doing, and take a look at results, the weekly and total results, as well as performance and statistic numbers. And before we go any further, this was the worst week ever for the whole portfolio, so if you want to know what happened, keep watching. And by the way, if at any point during this presentation you feel like you like what you're seeing and hearing, make sure to like this video, maybe share it to your friends, leave some comments. So, first to the new positions. We went long the Beezer Homes $17 calls out to October 2021. That is the longest expiration series available for this name, so that's what I took. I would have actually liked to take the expiration further out, but there is no such options, so I have to settle with October next year. There is much more on this on the next slide, but it's a strong company, strong industry, and I did an entry on a pullback in an uptrend. Then I took a short stab at ACB, so Aurora Cannabis. That's basically based on the favorable political situation. It has a very crazy run-up, so I took a small, roughly a bit below or a bit above 1% account size risk on this one. I went long SPCE, so Virgin Galactic 30 calls out to December also. This has over 30% short interest, and it was breaking resistance around the close on Friday, so the bet here is this keeps going on Monday. This was roughly 3% of the portfolio size, so not huge but slightly larger already. And then I took a third rather short period trade out to December 18th also. This is a long AMD, so Advanced Micro Devices 95, 100 and 105 call butterfly. If you don't know what butterfly is, you basically sell 2 of these middle strikes and buy one of each of these outer strikes as wings. So sell 2 for the body, buy 1 each of the wings, and that's how you get a butterfly. Maximum profit happens if the price of the underlying, so AMD stock, is around 100 on December 18th. And then the break-even point is somewhere around the wings. I think it's 95.5 and 104.5. So anywhere between there is profitable. Some reasoning on the Beezer Homes long-term position. This is a top stock in a top industry and top sector. So here's the stock itself. The industry is home builders, construction sector, and the broader index is here. I took basically I'm watching at a few things here. In home builders industry, all of the 12 companies within this industry beat their earnings expectations on this quarter, and in the sector 83%, so 66 out of 80 have done the same. The stock here of course beat the expectations, and it has done so 6 times out of 8 during the previous 2 years, so that's, well, quite often. How many positive earnings revisions have they received from the analysts? Well, the construction sector 61, home builders 9, and Beezer Homes, well, 1 within the past month. So this is basically the analyst companies that go through these companies and estimate how much their earnings may be growing in the future. They have bumped their estimates up within the past month, and that's a very good signal. The PE ratio of Beater Homes is cheaper than the industry, cheaper than the sector, and cheaper than the broad index, which is S&P 500. Price to earnings growth is not as cheap as the industry or sector average, but it's still cheaper than the broad index. So the kind of the fundamentals, they don't look bad at all. Actually, they look quite good. In addition, Beater Homes they didn't beat, but they grew their earnings per share by 168.6%. And they're expecting to grow another 24% next year. And my thinking here is that if there's a price 3 times out of 4 or 6 times out of 8, maybe they could grow much more than the expected 24%. Who knows? And here is another crazy number. They grew their earnings per share year on year for the third quarter by almost 900%. That's an insanely high number. So if this kind of party continues, I think this can be a very good investment for that kind of slightly longer term. Then the timing, well, I took basically a look at this chart here, and it's like bouncing up and down, up and down, up and down, kind of following this sort of channel up. And it does go through the red line, which is exponential 21-day moving average, but every time it goes below, it tends to jump back up within the week that follows, except for here it took 2 weeks to go back up. Well, now here, what did I think? Buy the bounce from EMA 21. So when I see that it goes through and bounces back up, well, it happened here, so that's where I bought. And the next day it was already quite a lot up, which was very pleasant. And that's basically that trade. Next up, we've got the cash flow trades in week 49. All of these follow the same idea that we're close to the upper Bollinger Band, meeting resistance, and then I'm selling calls way above that upper Bollinger Band. So here's the stuff that we sold: Pinterest 75 calls, XLB 75 calls, Sleep Number 80 calls, and then again XLB, so the basic materials sector, 74 calls. That happened basically after I closed these for profit. Since there are 4 trades following the very same idea, I thought that I'll go through this idea here so that you know what I'm doing and why I'm doing it. So why do I sell options short? Well, selling out of the money options has high success probability, but most of the time these expire worthless, and that's why selling them is very nice, because you basically sell them for some money and then most of the time you keep all of the money. So max profit is 100% of the sales price, and getting this is, well, quite likely. It doesn't happen every time, of course. Maximum loss is unlimited, and this is not very likely, but big losses are a very real risk. And because that's a real risk, a small account should never ever sell calls without protection. That's my opinion. You do whatever you like, but I would never recommend selling naked calls on a small account. So that's why I'm selling calls against positions that I have, and therefore I can only lose my position. And if I sell far enough out of the money, I can basically I need to get out of my position for a rather big profit. And what I aim to do is to get 75 to 50% of the profit out within the next few days, and then maybe repeat if the price is still around the range where I would like to be. So if we put this together, there's high probability of victory. I aim to get like half or a bit above of the credit that I receive when I sell those calls in a few days time ideally, and the max loss is basically that I need to sell the long position at a profit, which means that there really is no risk. So it's a high probability, risk-free trade that gives fast wins, at least if everything goes right. Well, now everything doesn't always go right, but at least in theory that's how I would pitch that to somebody if I would need to sell this ID. So how do we short for cash flow? when the stock price goes up above or close to the higher Bollinger Band and then turns down. Why do we do that? Well, the Bollinger Bands, they're defined as a band that has basically 2 standard deviations probability area around the 20 period simple moving average. Now, if we remember how normal distributions behave, that's basically 95% of observations stay within the 2 standard deviation area. So that means that 2.5% of the time the price would be above the higher Bollinger Band, and 2.5% of the time it would be below the lower Bollinger Band. So not very often, but it still happens. And when that happens, I sell calls roughly 20 days out. 20 days basically because of this one here. 20 days, 20 days. That means that the normal distribution works. I can sell them closer to increase my probabilities, but I wouldn't sell them further out if I watch the 20 period Bollinger Bands. And then I try to sell them around 1 standard deviation above the higher band. And why is that? Well, because that means that it's 3 standard deviations above the mean, and that gives me basically 97.7% probability of the price is staying within the bands. And now, as there is space above and below, it would mean that in 1.15% of the time, or percent of the cases, I would be losing. Now, of course, if the stock is going upwards quite strongly, the normal distribution is skewed to the upside, but I'm not going to go through that in this presentation. So basically, my success rate will be slightly lower than that one. Now the same on charts, because that may have been slightly heavy. Here's Pinterest. There I have plotted the 2. So basically the standard Bollinger Bands is this pink line here, or these pink bands. And the 3rd standard deviation is the purple bands. And if we look at here, the 3rd standard deviation is around 76.5. So what I did is I sold 75. That's slightly below. I did not have anything at 76 or 77. I would have done it there instead. But the next one was 80, and there was really no money to get, so I thought that I'll take slightly higher risk and sell at 75. Now the XLB, we see from here that the higher Bollinger Band is 73.73, so I sold first at 75, and then as I got the profit, I sold at 74, because there was no more money to be had at the 75, so I needed to take a bit closer, take a bit more risk to get some juice out of this trade here. Now sleep number, the 3rd Bollinger Band is 78.5, so I sold at 80, well above. The trades that I closed on week 49 are here. For victories we had the Air Transport Services Group. Oh, that was slightly disappointing. I held them for a month and it did not move anywhere, so I just thought that I'll get rid of it when it's at profit. And one of the cash flow trades I got out, I believe, in one day, from 1st of December to 2nd of December, for almost 40% profit. It didn't reach 50, but as I saw that I'm getting almost 40 on the first day, I just thought that I'll take that and try to repeat, which I did. Losses, there were none. But still, as I said, this was the worst week, so you need to wait a bit to see what happened. As open positions, that's what we have on longer term. So Pinterest calls out to January 2022, nice profit. Ford calls out to the same month, 2022, around 50%. Mattel, around 30%, also to the same January. Turtle Beach, 16% up, the very same expiration. Also the same expiration on General Motors, 20% or 21. And this Beazer Homes new trade out to October next year, 15% up after a couple of days in the trade. Very good. On midterm, we've got the Pinterest, a calendar course, around 50% up, slightly less, and the XLB January course, basically flat. Then we've got the sleep number January course at 31% profit. So long term and mid term, everything looks very, very nice. Now the short term positions, the few ones that I opened. ACB is 60% loss. I'm really happy that this is around 1% of the account. Doesn't matter too much. Of course, I would have liked it to be at plus 200% after the first day, but it wasn't. Virgin Galactic, 10% loss. For now, it's not closed, so it's loss on paper for now. And AMD Butterfly, well, that's totally normal. Butterflies tend to start moving quite close to the expiration. I expect this to start doing something on the last week. So for now, I'm just sitting on this one. All in all, it doesn't look awesome, so maybe I should simply stick to the longer term trades on the previous page. I like those percentages much more. Cash flow trades from the short selling of options. The Pinterest trade 33% up, XLB 11% up, and SNBR 20% up for now. So all of these trades are new. Now to the results. On this week here, there was a ton of action, and the November's additional 1,000 euros arrived on the account. So the account moved either from 5,500 to 6,344 and change. But we need to remember that I added 1,000 euros extra, so actually we lost like 150 euros in a week. And that is minus 2.84% negative growth, which makes this the worst week ever for the portfolio. It's not horrible, but it's still the worst week. Now the total number for 8 full weeks and I believe 1 or 2 days more is that we have 83% success rate on short-term trades. I haven't closed any longer-term trades, so I can't speak about that. For now they're going quite fine, and I hope they keep doing well. Most long-term trades are on green. Well, I think I just showed you how all of them are on green, so well, let's just say that they're all profitable. Portfolio has grown around 47-48% during these 8 weeks. If we wouldn't count this 1,000 euros, it would be more, but well, I'll count it to stay under 50% for now. During the same period, S&P 500 grew 7.5%. If we look at the performance graphic, that's how it looks. So blue line is S&P 500 and the model portfolio here is the orange line. October was low, November was super good, and the beginning of December has been a small drop. If you would like to learn more about option investors, what we do, or this small account growth operation, all you need to do is go to optioninvestors.club. See you around and have a nice end of the week.